Real estate is the land of tall tales, embellishment, exaggeration, and lies. Real estate investors subscribe to the mecca of bullshit. Let me explain. So let me back that up and qualify that a little bit. Right? So look at the headlines that's out there today, right? It's all pessimistic. Mortgage rates continue to increase, which is true. We've had historic rises of interest rates. Interest rates have more than doubled, which is faster than the last 40 years. Actually, the fastest time ever in history. So the cost of borrowing has increased heavily for real estate investors, for business owners, startup business, etc. On top of the cost of debt, the cost of energy, labor, construction materials, grocery, everything combined, the ugly head of inflation is also driving up the cost of everything around us. And when you combine all of these things, we see a high amount of investor certainty and overall investor pessimism towards the investment environment, right? To the markets. And that's well evidenced by the plunging stock market, right? The NASDAQ is down by over 45%. As of today. And I don't think we've even close to the bottom yet. Interest rates continue to tick upwards, right? Inflation continues to remain sticky. Now, rewind it 8 months ago. Just 8 months ago, we were in a very unique situation where we had very low cap rates, extremely low cheap debt, a flush of liquidity, with government bailouts and PPP or whatever it was, all the different schemes that they used to print more money from the Federal Reserve to the tunes of $7 trillion over a 21-month period. And this created an environment where investors were competing left and right for every type of asset class. House prices soared. Bitcoin reached new highs. Ethereum blew up. Multifamily real estate asset prices skyrocketed. Why did they skyrocket? Well, everything was cheap. Debt was cheap. And this creates a lot of interest in the space. And of course, more money, more investors, more operators, all poured into the multifamily arena, all with the goal of making a lot of money in multifamily real estate. And why wouldn't they? People were literally buying apartment buildings, not doing anything to it, operating it poorly, mismanaged, but because everything was going up and market appreciation was happening so rapidly that people were making money hand over fist despite of their deficiencies as an operator. And this creates a lot of uncertainty, false optimism, false belief that we made all this money because we are such great operators and we are such great investors. Whereas it is actually the opposite. The poor operations is covered up by a rising market, and when people make money, it makes people look good, it makes people feel good, whether they deserve that or not. Remember, there's a saying, the rising tide raises all ships. That's very true with multifamily real estate. If every property in Atlanta is going up because there's tons of people moving there and rents are jumping through the roof, then you made money because everybody else is making money. But now fast forward it to today, right? Interest rates are soaring, right? Interest rates have doubled and the market went into a shock. The buyers and all the competition that everybody was fighting for these properties disappeared overnight. All the lenders that had appeared, tons of banks were now all of a sudden getting competitive in the multifamily arena space, in the commercial real estate space, and now all this bridge financing dried up and disappeared. All the people that were making tons of money by buying properties cheap and then refinancing a few months later, pulling out their invested funds and still keeping the property, refinances fell off a cliff. Developers that were building multifamily real estate, this is a scarce resource and we need more, we have a huge lack, undersupply of housing units for Americans. So now development also fell off a cliff. Nobody's developing no more, nobody's refinancing no more, lenders have disappeared, and they're just waiting to see what's happened, right? There's less buyers competing to buy these multifamily real estate space, so it's like all these players that appeared overnight seemingly are starting to disappear. And now, of course, a trailing indicator is that the volume of activity, sales, any activity in the multifamily or real estate sector period has slowed way down. And that's sellers now. right? The sellers are like, hey, look, well, I was going to get $2 million more just 6 months ago. Now you're telling me my property is $2 million less and nothing's changed? I'm still full. I'm still completely occupied. I got beautiful cash flow. And you're telling me that this property is worth less? And that's a hard psychological pill to swallow for some sellers. And those sellers are not going to sell because they're going to sit on the cash flow. They're like, hey, look, I don't need to sell. I was just going to sell it because people were offering ridiculous prices. But now that those prices have kind of tempered off and now people are offering me less, I'm just going to sit on the cash flow that I'm going to collect every month and live off of that cash flow, tax advantage cash flow, until the market conditions change and I can get my price. So now we have a place where lenders are gone, less buyers, less sellers. Everything stopped. So what do we do here? What is the correct move? What is the winning strategy? What is the secret sauce that the wealthy investors will do right now? Well, guess what? I had the opportunity to pick the brains of all of my colleagues. I have several great friends who are heads of private equity firms, and at our last mastermind group, we had a chance to sit around and talk about how we're going to approach this, and I had a chance to pick everyone's brain and really get a good pivot. See, in times like this, you don't want to abandon your strategy. You want to stick to your strategy, but you want to pivot the tactics. Stick to the strategy, pivot with tactics. And that's what we're going to do here. So now, before we get into that, let's talk back about this situation, right? So now there's no sellers, but all sellers are not created equal. And this is where we get to the 3 Ds. These 3 Ds are the type of sellers that investors like us at Wealth of Wealth look for. And these are the 3 Ds. 1 is divorce, 2 is death, and 3 is dissolution. Obviously, if you have a death in the family and that person is the investor of the family, the breadwinner, the one that understands all these investments, and he hasn't created a good succession plan, then guess what? The heirs are lining up to sell that property, and so that they can squabble over who gets what of the profits, right? So that necessitates a sale. And in bad conditions, when there's less people buying, that creates, room for negotiation, right? Now we can negotiate the price and get it at a favorable discount because of there's nobody else buying, there's nobody lending, and it's difficult times. So this is where, in recessions, this is where great wealth transfers actually occur. Death, same thing. Death is obviously a more final thing than a divorce, but death of a principal founder, a principal or operator of investments can necessitate sale because oftentimes the spouse or the wife or the heirs, the children, they don't have the knowledge or any desire or inclination to manage or operate real estate. And as a result, they're ready to sell. And they will be willing to sell at discount. And of course, the last one is dissolution, right? Dissolution means dissolution of the partnership, dissolution of the entity that bought the real estate in the first place. Now, why would they ever do that? Well, partners fight, right? Partners disagree. Partners grow apart. And sometimes if they split up due to bad conditions or maybe some type of other internal conflict, they have to dissolve the partnership. And when they dissolve the partnership, the assets also must be sold. Often fire sale, right? We have to sell. And again, this creates potential for excellent deals. But as 3A, this is this really special one where we're going to see a lot of these type of sellers. We have to dissolve a partnership because we are insolvent, right? Poor operators with lack of experience, lack of knowledge, just because they saw everybody else making money, they thought that multifamily is an easy way to make money, and they weren't cognizant of headwinds that were developing, right? Capital markets started to bubble. There was warnings by the feds. Interest rates are about to go up. Inflation was persistent. The warning signs were all there. And now what's happening is we're seeing operators that have floating rate debt at 3%, failed to underwrite that it was going to double, but still they failed to underwrite with good sensitivity analysis. And now interest rates have doubled. They have floating rate interest rates that readjust from 3 to now 7. They weren't expecting this shock in the capital markets, and now they have negative cash flow. Maybe they were distributing cash flows to their investors previous to this, but now those cash flow distributions stop. Investors like, what? I know several operators that have had to stop cash flow distributions just so that they can get on the right side of the debt issue. The next thing is insolvency. We burn through our reserves paying off debt service, and as a result, there's not enough money to execute capital expenditures. If we can't renovate, we can't drive up rents and save ourselves. So you're in a position where you're almost handcuffed by debt. This is starting to happen. We're starting to see this scenario play out over and over, and we're expecting that scenario to increase or accelerate the rates that these things are happening in 2023. There's an expected $30 to $50 billion of floating rate debt coming to maturity this year. This creates potentially an enormous flood of opportunity for the savvy investors. So there you have it, guys. Don't get thrown off by the mass media. Don't get thrown off by wild stories and speculation. Do focus on the 3Ds: divorce, death, dissolution during a recession, and it might make you very wealthy. All right, guys, hope you enjoyed that. Hope you gained a ton of value. Please smash the like button. Do share with any people that might gain value from it as well. And of course, if you haven't done it, subscribe. And until I see you next time, keep continuing down that path to the walk of wealth. Boom.